UPBOptionMillionaires.com after the closing bell, March 9, 2017. It's a Thursday. Did I mention that? Going to go over some charts and then a market outlook at the end here. Look at Budweiser in those 105 puts. Starting to break down. Bounced off the lows this morning, but I do think that we're going to break out of this flag to the downside. Looking for 104 or less into next week. That'd be nice. Budweiser. Domino's Pizza, talk about breaking down today. Down over 2%. Rallied a bit, though, later in the day, but still closed down 1.95%. The start of something good there for Domino's Pizza to the downside. Why? There was no news, and when you see a stock pulling back for no news, there's usually a reason behind it. And you'll find out after the fact. So when you see a market pull back with no news, is what I've been talking about since 2008. All of the pullbacks for the market have been news-driven, event-driven. But when you start to see the market pulling back for no reason, you know something's going on under the surface. Domino's Pizza, I think one of the reasons that's not being highlighted today for the downside is something I've been talking about for a while with Domino's Pizza, the debt. 2015, they recapitalized. 2012, recapitalized. Not something a corporation does when they're sound financially. And of course, they utilize that debt to repay existing debt and to issue a one-time dividend to shareholders and also to buy back more stock. So when you have all that debt and interest rates are starting to rise, cost of capital start to rise, we have the jobs report tomorrow, we'll start to see wages increase. Well, come on, we need to start paying Domino's Pizza employees more money. What will happen, the smoke that'll be coming out of the Domino's Pizza will be when that first Domino's Pizza closes shop. Because that's what, their business model is. They don't own most of the stores. You have business owners, and when they start making less money or even start posting a loss, they start closing stores, revenue will drop. But, of course, at that point in time, the stock will have already dropped down to 160, 150, so it could be a nice pullback. We'll see if we break out of this diamond pattern. Continuation to the downside, got the 185 puts, locked some of those in today. Looking good. TLT, again, breaking down bond market. Look at support. We came to 117. We broke through it. 116 is the next line in the sand here, but longer term. Could we be looking at the bond market start to pull back a little bit here? We break down next supports under 100. For TLT, that's 20-year bond treasury ETF. Of course, we know if interest rates start to rise, the cost of capital is going to rise, and that's going to, how about the housing market? I mean, gosh, everything's great when interest rates have been at the abnormal historical lows they've been at since 2008. December 2008, when the Federal Reserve dialed it back to zero. Everything's great. It's just like Domino's Pizza, been living in a nirvana. Everything's low wages, low cost of goods, low rent, low everything. When that starts to rise, yep. So be careful what you wish for. Bond market, again, pulling back today. TLT, getting near a multi-year low. Break through that. Again, it's going to set us up on 100. That means higher interest rates. My goodness. How about small caps? They've been a leader. I've been talking about this for a while. If you look, small caps led us right out of the election. And this pullback, they've been leading us to the downside. First to pull back here. And you can see we're back in the channel. Back in the channel again. So look at the 133.75 level as support to keep us in that channel. Small caps. NASDAQ get a momentum sell signal today. Look at this. Even though we're still not showing it in price. Gosh, 0.08% was the move today. But behind that was a really nasty decline late in the trading session. That decline was recovered. We got all the way back. Oh, amazing. If you stepped away for these 2 hours here, because this market was doing nothing pretty much most of the time, you stepped away, and then you came back near the closing bell. You thought nothing happened. But no, there was some selling in the market. It was unbelievable. S&P 500 ETF got the momentum sell signal. We also bounced there. Almost got up to that 237 level that has been flirting with pretty much all week, both as support and resistance. And again, from the 2-year perspective, momentum sell signal. And then we've also closed last week's Trump gap. Gump trap. I did that the last video too. Pretty funny. But if you look at this. It took us 1 day to get this, right? What was that? Dow was up 6 trillion points, something like that. And it took us 1, 2, 3, 4, 5, 6 trading days to reverse that. I mean, talk about a market that is just like giving nothing to the bears. Nothing. I mean, the bulls get like one bing, after this. Here, the start of February, we're up every freaking day of February. We get into March, we start March with a big candle up. It's like, hey, and the bears, to get any kind of pullback, got to sit on the same position for 6 trades. Like, to drop $3. We moved $12 to the upside in like 2 weeks, and then you can't even get a pullback. Unbelievable. So this market's just not giving it to the bears. It's giving them the finger still. And today's intraday action, right? Here it is. Folks, this is the sell-off. We've got it now. Here we go. And then it just comes right back. I mean, it's the trampoline, the beach ball that tries to get submerged underwater, just pops right back up, something we've been dealing with since really the low is March 2009, which today is March 9th, 2017. Oh my goodness. Woo! It's been a long time. Remember, the price of the Caterpillar was down at $22. I remember watching the market low that day. It was amazing. JP Morgan Chase was at $17. 220 million shares traded on that day 8 years ago. A couple more charts, and then we're going to call it an evening. XLE. Look at it. Back to that 70 level. Back. We go back to 2008. Every time we've hit the 70 level, it's either acted as resistance or a turning point. Turning point to the upside. Turning point to the downside. Turning point to the upside. Turning point to the downside. Distinct possibility. Momentum is yet to roll over. But look late to the trading. It's like, we must close this at 70 plus, because under 70, UPB is going to talk about it in his video. So we're over 70. Yeah, that's bullish. Look at this. This line goes all the way back to 2006. And here we are. We closed above it. They were peeking into the charts late in the day. Like, get it over there. Get it. You know he's going to talk about it. So look, a couple other charts. John Deere. My goodness. Caterpillar pulling back significantly. But pull up Caterpillar real quick, and then we'll go to John Deere, because I think John Deere is setting up for a similar type move. And Caterpillar's pulling back. They've been augmenting their financials. Yeah, well, we'll see. To help their share price out. You can see this big candle to the downside right up against long-term trend line resistance. So again, just in that resistance test, you can see the price pull back. But then it's kind of bolstered with possible fraud. Fraud, dare you say? This is a Dow component. My goodness. John Deere, which has been breaking out to the upside, taking a little bit of a breather there. So John Deere could be heading back to 105. Who knows? Maybe we'll get back to support down under 90 for John Deere, because I think that's going to be a cheap trade for downside. DE is the ticker. And let's do Amazon, which bumping up against record highs. Did not break it today. Coming together, we're going to see a sharp resolution. Break out to 900, break down to 800. Simple as that. Google, GOOGL, trying to get up to new all-time record highs. Tried to break out today, got to 860, failed, came back to, 852 or something like that on the pullback, but very buoyant. Google. All right, and then the market outlook here. Look at the bond market pulling back. S&P 500 futures. Look at this again. The Trump top that we saw. I don't want to call it the Trump top. I'm not calling it top in the market. Let the record show. I'm just saying the top so far. Again, 1 day to do this, 6 days to reverse it. One thing you watch, you draw a trend line across. This action here late in the trading day today, that got us over that. Okay, that's a big possible breakout. And then also, we have the jobs report tomorrow. It's going to be huge. The only thing is, the huger it is, the more it's probably going to drive down the bond market, and we're going to see yields rise. And that, again, corporations that have a lot of debt that's going to be have to be recapitalized again, as they've done in 2012, 2015. That's a stock that you want to sell short or buy puts on. All right, UPBOptionMillionaires.com. So we continue to watch the market start to roll over, lose momentum, and then look, just like it's done since the lows of March 2009, we get these rampant reversals to the upside, which makes it very tough to short this market. Look at this. I mean, you're like, we're doing pretty good, but pennies, what do they call it? Trying to grab quarters in front of a steamroller. I mean, that's pretty much what it's been, trying to short this market. You look good for a couple days, but really, was it worth it? Was it worth it if we spike up to new highs? So again, we got to watch the job report tomorrow. It's going to be huge. How's the market going to react? Is the U.S. dollar going to continue to spike to the upside? Are we going to break out? And I think ultimately down the road, we're going to be over 110 again for the U.S. dollar index. UPBOptionMillionaires.com. We'll see you in the chat room. Have a great evening. Goodbye.